Hemal here, walking through my investment in MO Altria Group. Now, there are so many things wrong here, so let's just get started. So I invested money back in November 12, 2018. So I bought a stock there, and then I averaged down some point down the road. So we're not gonna go into exact dates, and that doesn't really matter. So now fast forwarding. So since here I've been holding this, and this was undisciplined by higher position than my normal position size. There was nothing right about this. I bought at the wrong entry, so everything was wrong, and I bought into wrong company. Meaning I definitely never want to buy into a company that causes harm to people. That's just not something I'm going to do again, because at the end of the day, they sell cigarettes, they sell smokes, and which causes harm. There's no good about it. There's absolutely nothing good about that. My reason for buying that was a high dividend. Back then it was about 5%, and now it's 9%. So the stock has gone down significantly. It will take like 4 years of dividend just to pay me back my loss. Right now I'm losing 32% on this position. So again, bad decision, bad company to invest in. So I'm still holding it. So whenever you see this purplish line or light bluish line here, so this is reporting earnings tomorrow before open. So options market, this is the implied move in options market. So most likely the stock will stay in between these two lines. Let's look at, since I own the stock, I need to manage through this now. So let's just look at a quick fundamental and technical picture. So sponsorship has been going down for a while now. And part of the reason is there are a lot of funds which are socially responsible funds, and they would absolutely not invest in companies, in tobacco companies, which again is the right thing to do. I myself would never invest again in something like this. So overall, last 5 years, pretty good earnings per share growth, 11%, earnings stability of 3. It does have that pricing power. So that's pretty good. It's supposed to grow slower, and then return on equity is 75%, which is really good, by the way. Cash flow is good, so dividend is not at risk, which is a good thing for me because I own the shares in this. Sales are not impressive. Earnings per share growth not impressive. Let's look at E-Trade very quick. So there are only 2 analysts that gave the target in the last 3 months, and they are giving target of $68. I am not sure how this stock is gonna go to $68, which is somewhere right here. I don't really see that doing that. I'm just going to get out if and when I get my money back, or if I decide something else needs to be done with this. Again, we looked at the earnings. It's going to continue to grow at a slower pace. Revenue is estimated to grow as well. They will probably look at Jewel tomorrow, and then they will take some more impairment charges on that. So probably a couple billion right there. So there's no way the earnings would be good. But again, that's what I stand as the biggest thing here. And that's what I've learned, and I have kind of prevented from me doing that, is not buying a stock if it is under its 40 weeks or 200-day moving average. Because when I went ahead and averaged down, the stock was actually under its 200-day moving average. And second thing is, I never average down. I only add to my winners. I do not add to my losers anymore. So those are 2 very important things to remember, in my opinion. That has saved me a lot of pain, and that will do the same for you. So that's all I have. Let's see how I manage this position over the course of months and years probably. So that's all I have. Have a good one. Take care.